Um, Bill, can you see my screen?
I can see your screen, and we can see the people registered are starting to fly in. If you hit the top of the tab, you'll see it's 24 and counting.
I got 32.
All right.
32 participants.
Good morning, friends. We'll just wait a minute for others to join us, and then we'll get started. I think the participants constantly joining the call, so we'll just wait another minute. Thank you.
We have 37 participants who have joined us so far. 38.
Wow. Okay. Well, good morning or good afternoon, friends, wherever y'all are located, or good evening. My name is Deep Sen Gupta. I'm from DSG Global, international trade consulting firm, and a knowledge partner for the BSMA. Welcome to BSMA's webinar on navigating VAT for cost savings in a global, complex, regulated market. We've got a fantastic group of panelists here for you. Dale Bushell, Paul Hingst, Daniel Brandt, and Alex DeMario, and also Gabriel from VAT IT. But before we go into further introductions, let me just remind you that time has been set aside for questions and answers towards the end. And if anyone has any questions, please type them in the Q&A section at the bottom. There will not be a raise your hand feature, and the chat section has been disabled. So please use the Q&A. I also want to remind you that this event is being recorded, and copies of the recording and the slides will be distributed to everyone who's registered for the event. So without further ado, let's jump right in. A little about the BSMA first. The Biosupply Management Alliance was born out of a need for creating a worldwide community of operations and supply chain management leadership in the biotech, biopharma, and biomedical device industries. Based in the San Francisco Bay Area, it's home to over 400 biotech firms, and the BSMA provides a forum for collaboration, learning, and best practices sharing. So, given our philosophy, we're thrilled today to talk about BSMA's take on VAT recovery. I just want to, I just want to remind everyone that our 17th annual summit happens this March in Foster City on March 27th and 26th and 27th. There's 4 main tracks, lots of breakout sessions, and the links on our website on bsma.com or the link in this presentation down below. And theme of the conference this year is how do you achieve sustainability of the supply chain to bring affordable healthcare? So we'd be thrilled to see you all in person. We start off our presentation, our panel discussion with Dale Bushell. Dale is the Director of Pharmaceuticals at VAT IT. And a leading professional in the field of VAT recovery for the pharmaceutical sector. Dale is dedicated to optimizing VAT processes and ensuring compliance for his clients. Dale has a Bachelor of Commerce in Business from Varsity College in South Africa. Dale, over to you, my friend.
Brilliant. Thanks, Deep. Well, you kind of addressed my first elephant in the room. Hi, everyone. My name is Dale Bushell. No, I'm not from the UK, and no, I'm not from Australia. Originally from South Africa. The reason I'm bringing that up is I do understand that sometimes my accent when I'm talking, maybe you mishear what I'm saying or you don't hear me altogether, which is fully understandable. Please just, again, use the Q&A box below, and we'll address those questions towards the end. But nevertheless, let's jump straight into it. So just some fundamentals, what is VAT, or value-added tax? It is a foreign tax charged primarily in Europe, or that's where it stemmed from. How does it work? Well, it's essentially like sales tax here in the US. It's pretty much charged in everything you purchase or services utilized. The only upside to it is there is an opportunity to recover it potentially. I guess the next question is, where will I incur that? As we go through the slides in the presentation, I'll dive deeper into it, but essentially you can expect to incur that all the way from the beginning, inception, so manufacturing, through to your preclinical, even to your phase 1, 2, 3, even maybe 4, even all the way through to your commercial side. But I know in today's thing, we're looking at, in today's session, we're looking at clinical trials, so that's where we'll go up to phase 4. Am I entitled to get this cost back? It's a very heavy question. A lot of people kind of have a hit and a miss to this. In short, the answer is yes, and you can do so without needing a physical presence in that country. So just a bit of a backdrop to that. Back in 1986, the EU, or the founding EU countries or member states, released this piece of legislative, which we refer to as the 13th Directive, which essentially allows foreign entities that do not have a physical presence to recover this VAT. The reason they did this was to drive economic growth within their countries. So they're saying, well, you're coming into our country and doing business, you're increasing revenue for our economy. We'd love to incentivize you to keep coming back. So the opportunity is, here you go, you can recover the VAT. Now, admittedly, the VAT authorities don't go around and openly exclaim, look, you can come get your taxes back and all this good stuff. It's very much hidden in the legislation. And over the years, businesses have become more aware to this. And I guess today's session is for more of the smaller to medium-sized guys who don't have the infrastructure, aren't aware of this, are venturing off into the foreign markets or jurisdictions. Now, which countries does this relate to? So there are various countries. There's actually more than 150 countries worldwide that implement a VAT mechanism. The big thing here is that not all countries allow for recovery. And an even more specific thing is that the VAT recovery works on this law of reciprocity, which means that one country allows another to recover from it based off of the fact that they can do the same in your country. Now, looking from a US biotech standpoint, because the US doesn't use VAT, we have sales tax here, and our sales tax is non-recoverable. A lot of other countries say, well, our businesses can't recover from you, so you can't recover from us. The upside to that is, and something that we've seen over the years in the clinical trial space or the pharmaceutical space, is that most of the trials and expenses that do kind of are incurred actually happen in countries where the recovery is, there is an opportunity to recover it. So yeah, just right at the end, just a little did you know, every year around $21 billion of VAT goes unrecovered. These are stats that we've seen over the 30 years that the VAT IT group has been around. And I really just wanted to highlight that if there's this amount of money that's being unrecovered, potentially your business is missing out on the opportunity too. Great. Now we get into the juicy stuff. Jumping straight into the common areas, or common areas where you can incur VAT within your clinical trial. The first one, probably the most important, is your import VAT, the movement of the goods. So what is import VAT? The first thing I want to address is import VAT is not the same as import duties. Many kind of think that the import duties is the same as import VAT. That's not the case. They're very much two separate taxes. They work the same. They're assessed at the port of entry, and there are generally a percentage that's charged on the value of the goods. However, import VAT tends to be a larger percentage or a higher percentage that's charged or levied on those goods clearing customs. Now, why is this relevant in the world of clinical trials? Well, we know as soon as we start going cross borders, we're needing to get our drug products or goods into these various jurisdictions to depots so that we can disperse into our clinical sites. So every time an import takes place, import VAT will be assessed at the border, or the port of entry, should I say. So it's very important to understand that, if you're moving goods, you're most likely incurring the import VAT. I guess the next question would be, how much VAT will I be charged? Well, that's very dependent on where you're moving your goods to. So the VAT percentage varies between different jurisdictions, and obviously the value of your goods kind of affects how much is being charged. Let's say for a simple example, if you're moving your drug product into your German depot, Germany charges 19% VAT, and the value of the goods is assessed as 100,000 USD. Essentially, 19% of that will be $19,000 of VAT that has to be paid upon entry into Germany. But again, the opportunity is that it's not just a sunk cost anymore, that you are able to potentially recover it. Why would this be important to me? Well, most times import VAT is kind of, looked after your supply chain teams, someone who looks after CMC, or maybe even your clinical supplies. But the big thing here is that this impacts the finances within the clinical supply chain altogether. So your budget towards what you've allocated for the clinical trials coming up. And VAT can increase those costs by up to 27%. A lot of businesses, again, think, they get hit with the shock burden that all of a sudden they move the goods in, and there's an additional 19% on the costs that they didn't account for. So very much, you should be planning for this in advance rather than leaving it to the last minute and trying to find extra budget to make sure you can get your goods through customs. And then, if you're wanting to go and recover this yourself, what are the documents that you need to recover the VAT? So the most important one is going to be your entry acceptance document, the EAD. This shows where the VAT is and how much has been assessed. Not only for yourself, because you can go and verify this, be like, are we actually incurring the VAT? You'll go and see it, but also the VAT authorities require this every time you do, a VAT return. The other documents needed are going to be your freight or shipping documents, the pro forma invoice for contents and the valuation, and then lastly, we obviously need the confirmation of invoicing and payment of the VAT. Very important to highlight that VAT is only recoverable after it's been paid for. You can't proactively go and recover it, but you can proactively plan for it. So it's going to be incurred, and then upon incurring it, you can start the refund process. Don't worry, you haven't lost your mind. This is very much in a foreign language. It is actually a sample of a German entry acceptance document. I really just wanted to kind of share this to show you, if you want to, if it maybe sparks something inside your mind to go, well, let me actually take a look at this. We have done some shipments. Is actually VAT for us? If you look right at the bottom, you can see the value of the goods that were moved here were valued at nearly 177,000 euros. Just above that, you can see the 19%. That's how much VAT was applied. And if you go look at the B0000 line code, that nearly 34,000 euros, that's how much import VAT was assessed on this single shipment of goods into Germany. Now, we know in the clinical trial space, we're planning 12, maybe even 24 months in advance. And maybe you think, okay, well, in that time frame, we're looking at doing 3 to 4 shipments. You can proactively kind of guess, I wouldn't say guess, but you could estimate that you're looking to, times this 34,000 euros by 3 to 4, and nearly, looking at about 100,000 to 130,000 of VAT expenses. Most people, again, looking at this as a sunk cost and not planning for it. But luckily, you're part of today's session, and now well, if I'm incurring the VAT, there's an opportunity to recover it. And then looking at the other areas, other common areas where VAT can be incurred within your clinical trials, your CRO pass-through costs. A big thing that we saw recently was where a sponsor was using a CRO. In this case, it was MedPace, and they received monthly reports, Excel reports showing the entire cost breakdowns of what they're spending, the site visits, the translation fees, medical bills, whatever the case is. But the problem there is it was just the totals of everything. There was no tax line items, and more specifically, there was no VAT line items. So what we asked MedPace was, do you mind sharing those underlying invoices? And you can go back to your CRO and go do the same thing. And when they shared those underlying invoices with us, we reviewed them and we found that there were actually a whole bunch of costs that incurred VAT. So like translation fees and, again, site visits or events, medical conferences. And essentially, the follow-up question to that was, well, MedPace, are you are you looking after the VAT, or are you rebilling the entire cost back to the customer or to the sponsor? And they answered us saying that we rebill the entire cost back to the sponsor, which means that you as a sponsor, if this is happening to you, you're eligible to go and recover those costs as well. Then moving into your manufacturing costs. So, if you're manufacturing anything abroad, some suppliers charge VAT on the manufacturing associated with the development of medical products. So for example's sake, maybe you're manufacturing something in the Netherlands. Sometimes what happens is that manufacturer sources supplies locally, and because they're sourcing it locally, they're charged VAT. The tendency is they will recharge that VAT cost back to you because they're like, well, it's not our cost, it's your cost, so here you go. Essentially, they try and make it as easy as possible for them, and they leave you with the burden. Again, a lot of people see it as a tax and they think, oh, it's just the cost of doing business. No, it's very much a recoverable expense. Comparative purchases, your med kits, maybe ancillaries. This is probably the next biggest area you will incur VAT. Very important with this is to look at it from two different angles. The first angle is if you're doing a trial, let's say your clinical or your clinical depot is in, or clinical site is in Germany, and you decide we're going to outsource these comparators with a German supplier. Just as like a precursor or a heads up, that supplier will have to charge you VAT on those comparators or med kits or whatever the case is, because it's deemed as a local supply. Very much like you go into a grocery store and buying your goods, they have to charge you sales tax. It's the same concept in Europe. Because you're purchasing goods from them, they need to charge the VAT. Now you may be thinking, well, Dale, I'm actually sourcing my stuff from China, or it's coming from India, or wherever the case is. Well, then the converse happens and we flip back to point number one. Well, it's going to incur import VAT, because now you've got to move those comparators or the ancillary kits or whatever the case is into Germany. And again, those have a commercial value to them, and they're going to apply the 19% VAT onto that. So just very important to highlight that. And then the last one being your, maybe not so relevant now, but it definitely becomes more important as the business grows and as you increase business activity, is your travel, events, and conferences. So if you have ClinOps teams, executives who are traveling around for meeting clients, partners, even your site visits, whatever the case is, all those hotels, meals, and drinks, and ground transportation are going to incur VAT. And then on the other side, if you're attending medical conferences where you're exhibiting to highlight the medical findings within the business, you may have exhibitor fees, you may have AV rental, the registration for the event, all of that will have a VAT charge associated with it, and again, potentially recoverable from that side. And then I know there's been a lot of talking from my side, but I really hope it's kind of sparking some ideas, maybe to think, are you really reaching out to your ClinOps team or your supply chain team? Hey guys, have we looked at this? But just moving into the last slide from my side, which is navigating all these different jurisdictions and the complexities behind it. The European Union, the first one, as much as they say they're a union, there really isn't anything union about them. Each EU member state sees themselves as their own country. They have their own set of laws and legislations, own set of VAT rates, own set of requirements that you need to adhere to when you're trying to apply for a VAT refund. I know there was like a pre-question given here where if you want to highlight, well, for me to highlight the difference between like Italy and the Netherlands. Again, looking at Italy from a US standpoint, it's a terrible country. And I'm not saying I have anything against Italians or anything like that, but in a VAT perspective, it's terrible. There's no reciprocity, as I mentioned before, that law of reciprocity. There is no reciprocity between the US and Italy. So if you're incurring any VAT charges there, unfortunately, those are going to become a sunk cost. But again, if you're planning for this in advance, there are ways to set up the supply chain, make sure goods are moved maybe through a different country or first port of entry so that the VAT can be handled. And then if it's moved into Italy, there's no VAT issues on that front. Where if you verse, against the Netherlands, it's very much a favorable country. The VAT is very much recoverable and a lot easier to work with from a US biotech standpoint. Just highlighting, the EU as a whole, it is seen as one like customs border. So where you're going to incur the import VAT is actually at the first port of entry. So wherever you're shipping those goods in from, So if it's going directly into Germany, that's where the VAT will be assessed. As soon as those, the goods are dispersed to the various sites throughout the EU, there's not going to be any intra-EU import VAT because they have intra-EU trade agreements that mitigate that altogether. And then the opportunity with that, and I think the biggest thing there is the drawback period. So you have the opportunity to go back up to 12 months in most countries within the EU, with the exception of the Netherlands, who actually allows for up to 4 years. They work on a normal calendar year. So right now you have the opportunity to go back to January 1st, 2024, all the way up until December 31st, 2024, and they have a grace period of up until June 30th, 2025 to actually submit those refunds. Very, very important to highlight that VAT has an expiry date. So if you miss that submission date, even if it's a day later and you try to submit for a VAT refund, unfortunately, there's nothing that can be done. So again, very, very important to keep in mind that it does expire and to plan for that. The UK, we know post-Brexit, it's caused an absolute headache for everyone. Unfortunately, it's no longer part of the EU, and VAT is assessed at 20%. Their drawback period is also 12 months, but they work on a little bit of a different calendar cycle. They go from July 1st to June 30th, and then a 6-month grace period for any last-minute filings that need to be done. And then very much other notable areas being the APAC region is Australia, Japan, South Korea, New Zealand. All of Australia, South Korea, and New Zealand allow for 4-year drawbacks. So the GST charged in Australia, the Japanese consumption tax, and the VAT that's charged between South Korea and New Zealand is also very much recoverable. But before I pass back to Deep, I really just hope sharing this information, it's just sparked some ideas internally. Hopefully, it's answered some questions you've always had around VAT. But again, towards the end of the session, happy to address any further questions that come up. Thanks, Deep.
Sounds great. Dale, thank you so much. And friends, please put in your questions in the Q&A chat section down below, not chat, a Q&A section down below. Thank you so much. Our next speaker is Paul Hingst. Paul, if you don't mind me embarrassing you and reading your bio. Paul is the co-founder and principal consultant of Beacon Biopharm Associates. Paul's helped clients save and recover hundreds of thousands of dollars in duties and taxes, including VAT, by implementing innovative strategies and navigating complex regulatory environments. Paul, we'd love to hear about those innovative strategies. Before co-founding Beacon Biopharm, Paul held key roles at industry leaders such as Fisher Clinical Services and Amgen. Paul holds an MBA from Pepperdine University and a bachelor's in cell and development biology from UC Santa Barbara. Over to you, Paul. Thank you.
Thank you, Deep. Appreciate the opportunity to be here. So as a consultant for the past 4 years, many of my clients tend to be early phase pharma. I tend to find there's not a lot of supply chain knowledge or expertise within these companies. Generally, the supply chain is filled by the formulator or the chemist, someone in CMC that manufactured the product that needs to move the product. So the shipment values I'm dealing with, $50,000 to $250,000 declared value. So I've seen multi-million-dollar shipments in the past with large pharma. So a very much a smaller dollar value in many cases. But for the early phase companies that just maybe were waiting to do a Series A, that are venture capital, that can become a material amount when we're talking VAT rates of 19% in Germany, $50,000 as potentially an unexpected expense can be a surprise. The clients really tend to rely on the CDMOs or couriers for import-export guidance. But as we all know, that a lot of these companies will not provide any sort of tax advice. So they won't let you know, by the way, your import duty is X, your VAT is Y. Oh, and also they don't let you know that is recoverable. They just give you the invoice at the end of the time. A lot of times, as Dale even mentioned, the entry acceptance document, well, the one he showed was in German. If you don't speak German, I didn't see VAT anywhere written on the document that Dale showed. If the CDMO or the courier even provides that document, the person who's got to has to review that document to understand what it is, and then they've got to realize that that is being charged. So a lot of times my clients, they don't even know that they're being charged. What they do understand, though, is that the cost of the shipment and the additional charges do become a function of the value, declared value of the shipment. So with that, Deep, if we can go to the next slide, and I'll talk a little bit about valuation. These are a few of the questions that I hear from my clients is, can't I just use a nominal value? You know, I don't want to pay taxes on a $250,000 shipment. Why can't I say it's $5? A lot of times clients will say, well, it's not for sale. It doesn't have any value. Well, it may not have a commercial value because you're not selling it. It may not have value to someone else buying it from you, but there's definite value to you as the company. Why did you make this material? Why are you moving this material? Why are you using it? And there was some sort of cost to you as the company to obtain that material. So there, even though it may have no commercial or no value for sale, there is a value. And I just got a new one yesterday. I saw this in an email, was, oh, it's a small amount, so there's no value to it. There still is a value. The value may be lower because it is a lower quantity, but it still has a value. So unfortunately, these tend to be I don't want to call it a tax or a VAT strategy, but it tends to be a common occurrence that I hear with my clients. So again, as I mentioned, they are aware that the duties and taxes and the total cost of the shipment is a function of the value of the item. But I think what a lot of people aren't aware of is that the World Trade Organization has strict definitions about the 6 valuation methods that can be used. And I know Dale mentioned a lot of the countries where that is charged, where it can be recoverable. All of the countries that he was mentioning observe or are members of WTO, and almost all the countries where we do clinical research are WTO observers or members. So we do need to follow those 6 methods for valuation. We can't just say it has no value. So Deep, if we can go to the next slide. So bringing this all together, how do I advise my clients? Dale mentioned as well is be proactive, prepare for that. Know that you're going to be charged that, which that is sometimes an alarming conversation to them, because when I can tell them, hey, you're going to import this into Germany, you're going to pay 19% that upon entry. And again, they weren't planning an extra $50,000 expense for that shipment. They didn't realize that it was going to be charged. So it's a little bit of a surprise. So again, be ready to pay these upon import. Proactively preparing, again, once you know that that is going to be charged, there are steps you can take. Again, going back to what Dale said with the entry acceptance document, it's not going to come as standard from every shipment. You need to make sure your courier is aware of your intent to recover VAT, so that they can get you the right documents. Tell them ahead of time, I need this document, this document, this document, so that when you get that package from them, you're all set. Sometimes you may need to get a registration. In the case of the UK, you can get an EORI number. Get that in place ahead of time so that you don't run up to that June 30th deadline and realize, wait, I have to do 2 more steps ahead first before I can actually recover. Make sure you're ready to get that recovery when that time comes. And then there are compliant methods to lower your VAT, not really lower the amount that you pay upfront, but lower that net effect, and be ready, get that recovery, recognize where you can recover. Again, as Dale said, in the case of Italy, maybe choose a different point of entry into Europe so that VAT doesn't become a sunk cost. So don't mess with the value of the shipment just to lower VAT. It's not really a long-term success strategy. It's more of a bad practice, I'll say. But again, be prepared, be ready for it, recognize it's going to come, work with your partners to get everything in place and then recover, get everything back. I don't want to be part of that. What was the number, Dale? $21 billion that's left on the table, subsidizing the rest of the world. So thank you.
Thanks, Paul. I appreciate your very valuable information. Our next speaker is Danielle Brandt. Danielle is a supply chain consultant with Controlled Chaos Consulting. Danielle and Controlled Chaos Consulting specializes in supply chain solutions for pharmaceutical industries. Now, with over a decade of experience in clinical supply chain management, working across multiple large, medium-sized, and startup drug development companies to driving drugs through the clinical development pipeline. Her past experience and leadership roles have included Aerovate Therapeutics and Syndax Pharmaceuticals. And I just want to add, Danielle's obviously, like many of our other speakers, got tremendous knowledge of both sides of the table as clinical trial company and now a service provider. So over to you. Thank you, Danielle, for joining.
Hi, Deep. Thank you for the introduction. So like Deep said, I was working mostly for small pharma, and then unfortunately this past summer, my company unexpectedly closed. So I decided to give consulting a go, and I developed my LLC in September. And what I've seen since starting my company from former companies and my current clients I have now is that, like Paul was saying, they rely heavily on the CDMOs, carriers, and vendors for guidance and advice. But most of these vendors won't really give you guidance. And that's why it's helpful to reach out to VAT IT and other services like that if possible. And now current clients are also now trying to inquire about free trade zones and bonded warehouses to avoid VAT or delay it. I work with a lot of gene therapy and biologics, which are very expensive. And so they're looking at other possibilities on how we can delay it or leverage these free trade zones. My former companies are so unaware of how much VAT can be reclaimed and their associated timeframes. My one company that unfortunately closed, we luckily were able to reclaim $1 million in VAT just for a year. And that was nice because it was a small biotech company and $1 million is $1 million. Deep, do you want to go to the next slide?
Yes.
So as Paul was saying, it's helpful to have an order number to reclaim VAT. Most times, though, when I ran into this in my past with the small biotech companies, we needed some type of entity in the EU mainly to have an order number, and we were a US-based company. So what we did, we were able to leverage our CDMO or companies like VAT and other companies like that to help us reclaim the VAT. As I just said earlier, if your company is unexpectedly shutting down due to bad data, it's still possible to get that refund. You just have to work closely and still have some type of finance structure in place to get that refund, or see if the company will front you the refund prior to them getting the refund. And by classifying your materials as samples, I'm not required to pay VAT. That's not true. We all would love for that to be true, but that's simply not true. Deep, do you want to go to the next slide? My recommendations are to definitely leverage your CDMOs and carriers when applicable. One of my biologic clients I'm working with right now, we were able to ask the drug manufacturer if they were able to reclaim VAT for us. And if you're working from a supply chain perspective, get finance involved. They'll help you with this, and they can communicate and you can work on getting that process in place. Understand the parties you're working with and whether they have bought in warehouses that can be leveraged or not. Thank you.
Great. Danielle, thank you so much. We again, friends, please put your questions in the Q&A section at the bottom. I'm thrilled to introduce Alex DiMario. Alex is the Associate Director of Clinical Supplies and Logistics at Verve Therapeutics. Alex is going to be our final speaker today, and he brings a unique perspective as a company that's actually getting VAT back. Alex has been working in various supply chain functions in both the medical device and the biotechnology industries over the past 15 years. In 2021, Alex joined Verve Therapeutics based in Boston, Massachusetts, managing global cold chain logistics and clinical supplies, packaging, and distribution. Prior roles include Biogen and Smith & Nephew Advanced Surgical Devices. Alex has a bachelor's degree in business administration from Bryant University. Thanks so much for joining us, Alex.
Thanks, Steve. That was great. So yeah, like you mentioned, I'm sort of the in-house person on the panel. I'm not a consultant. I'm working directly for a sponsor company. So I thought, for my piece, I would kind of reflect on my experiences both at a larger biotech and at a smaller biotech like I'm at now. Although, disclaimer statement, I may or may not have been told to say this. This is a reflection of my personal opinions and experiences, not necessarily for the company that I currently work for. So yeah, I just thought I would start. A lot of this is has been said already in previous remarks, but if you're working for a large company, what I've seen is oftentimes there's an existing infrastructure, around the different functions that are required to sort of assess VAT and taxes and shipping costs. So there's usually a very large established supply chain team, potentially dedicated in-house functions for trade compliance, that are looking at all of the World Trade Organization, customs rules, regulations, how you should be classifying your materials, best ways to manage export import. And then even if you're lucky enough, your finance department might have dedicated roles specifically dedicated to tax. I'm thinking like indirect tax. Maybe there's a whole team of people whose job it is to assess what borders you're crossing and what the VAT implications are, and then how you can recover those. Whereas at a smaller biotech, you might be joining a startup, maybe phase 1 company before you've even initiated a clinical trial. You might be the only person in the supply chain department. You might be a supply chain department of 1. In my case, I was the first person at this current company hired in supply chain. Before I joined, I think there was somebody in CMC was managing shipments and things like that. So oftentimes at the beginning, it's not really a thought, especially, the focus is just to get your product where it needs to be for manufacturing, and the costs associated with it are not really given too much time. And then same thing in the finance department. There might be, in a small company, you might have 1, 2, 3 people, and certainly nobody that's thinking too closely about VAT. So then thinking that way, I've kind of mentioned it already, but in a larger company with these built out departments and functions, procedures, there's probably at that point a recognition and understanding of VAT implications across the organizations, across departments, whereas a smaller company, it might not be thought of. And if you're a supply chain person coming in as the first or second supply chain person at a company, it's kind of on you maybe to be the first person to start thinking about that and pushing for that. Other practical things I've noticed, commercial size organizations, large organizations most likely have country registrations outside of the United States. As Dale mentioned, I think you need to at least be registered in a country if you want to recover VAT that's been incurred there. If you're in a small biotech that's in the US, it's highly unlikely that you're going to be registered in another country prior to commercialization. So you would not even have the capabilities to recover VAT on your own unless you take the steps to do that. Then the last piece I noticed is, in-house processes. I already kind of mentioned it, but a larger company might already have an existing SOP or process or way of recovering VAT through a standard procedure. Whereas if you're at a smaller company, you're going to rely heavily on external vendors and consultants, like Paul had mentioned earlier. Next slide. So just based on that, I have a few recommendations, especially if you're starting at a small company and you're part of a small supply chain team. The first recommendation I have is keep yourself organized, get yourself organized early, and organize yourself often. This is especially related to managing your shipments. So as soon as you start and you get a lay of what what you have in your supply chain, get yourself a detailed record of what products you have, what the tariff codes are, what the product evaluations are, any information you have related to your products and how you're shipping them, how you're exporting them, how you're importing them. Keep a detailed database. It can be Excel, Smartsheet, whatever, but as long as you have it organized so that you can quickly reference it. And then also like shipping history, it sounds obvious, but a shipping tracker is going to come in handy. You know, maybe three years later, you need to know what you were shipping into Austria or Australia or somewhere in 2019. If you're just doing these one-off and they're buried in your email, you're not necessarily going to know. So even if you just have anything that you can refer back to, where you can jog your memory and say, this is what I was shipping, it does come in handy, especially because, you know, if you're at a small company, it's highly unlikely that you have an ERP or any type of, you know, system platform to kind of keep records of these things. And then the last thing, you know, Dale mentioned this in his talk, the documents that you're going to need to recover VAT if you decide to do that, your customs invoices, the customs entry documents, billing invoices, those are huge. So, you know, even if you're not recovering VAT at first, there's a chance you'll probably want to do it later. And in some jurisdictions, you have a right to do that 18 months, 2 years. Some countries, I think, allow you to do it indefinitely. So you could go back and recover VAT years later. So it will help you a lot if you have all those documents saved right up front. I would say the number one document that you should try to have on hand and saved would actually just be the billing invoices. So the invoices from, I think, customs to the courier that show the VAT that was charged, and then the onward bill from either the courier or the broker ultimately to the sponsor that shows what they're charging you for, because you do need that to recover VAT. So just having the entry document and the customs invoice alone isn't enough. It's often that that rebilling from the broker or courier will be needed, and those might be the hardest to track down later. Second piece of advice is just to be an advocate for VAT recovery. I would say both internally and externally. Externally, you know, obviously, I think one thing that I recommend is, even if you're in a supply chain role, not necessarily an external manufacturing person, you might not be super directly involved with the CDMOs you're working with, but I think it's important to make sure you're part of those teams that manage the vendors, and particularly when you're a small company, you're probably going to be there as you're setting up contracts with your external vendor network. So I think it's really important to be part of those setup conversations, get yourself onto the MSA review panel, work with the vendors to set up favorable shipping terms, check out what they have in the MSA as far as Incoterms. And then a lot of times when you're setting up contracts with vendors, that's when you could have the opportunity to see what services they might offer to either defer VAT or help you recover it directly through the CDMO. So I would say take that opportunity up front to build in those processes if you can. And then internally, you know, like I said, a lot of functions are not thinking about it, and you might be the only one thinking about it. There might be some cost associated with recovering VAT. Maybe you're working with a consultant or engaging an external vendor that would require some upfront costs, you know, as part of that. You might have to explain to somebody in leadership why that's important, maybe in finance or within your own organization. So I would just say, you know, be prepared to kind of pitch, you know, why it's important to pursue this, and explain that you could be ultimately saving the company a lot of money, you know, if you just make a small investment of time and money, you know, upfront. Next slide. This is a little bit outside the scope of, I guess, this webinar, but one thing I would say is, you know, you don't have to stop just at VAT. There's also, I know we said that customs duties generally are not recoverable, but I think on the US side, if you're bringing material into the United States, you are going to face US import duties, and those, depending on how you've sort of classified your materials, you know, with the HTS codes, you could be potentially classifying them wrong or in a way that makes you subject to US import duties when you don't necessarily have to be. There's something called a prototype exemption, which you could apply to some of your materials, and this would allow you to basically bring a lot of your manufacturing materials into the US duty-free. So, I mean, that would be number one, would be kind of doing an assessment of your materials. You might have to work with a consultant to see if your materials do fall into this category. But if you can, prove that your production materials fall under the prototype category, you could be saving tons of money on import duties at the time of entry. But then also, if you've been classifying your materials wrong for a number of years or something like that, you could then retroactively go back, say, actually, these should have come in under prototype, and then you can basically write a protest to customs and recover the duties that you did incur. It's a little bit complicated, so you probably need a consultant or somebody to help you with it, but there are other opportunities to sort of recover costs. And the last piece of advice, this is kind of a selfish thing, but I would say just promote your accomplishments. If you're one of the only people thinking about this in your organization, and you do happen to take some actions and spend a little bit of time, and you end up getting your company $1 million tax refund, or you can prove that you were able to avoid or defer even more money that you would have spent otherwise, then I would say just keep a record of that, put it in your performance review, let your boss know, because it's a good way to show that you add value to a company.
Alex, that was amazing and so relevant to smaller companies. Thanks for listing out all the different recommendations, and that was really amazing. And also highlighting the differences between a larger company and a smaller company. Friends, we're going to jump into the Q&A section now, but if y'all have any questions, please take a screenshot or send us an email, and we can direct your question to the right resource on the call today. But before we go into the Q&A questions in the Q&A feature, I've got about 9 questions that were sent to me earlier. Dale, the first question's to you. Will the business be audited on something like this, VAT recovery?
Great question. Short answer is no. And the reason we say that is because when you're applying, so you won't be audited by the IRS. The big question we always get asked is, are the IRS going to audit us? Because now all of a sudden we're receiving all this cash. The short answer is no, because when you apply for the VAT recovery itself, that VAT recovery is audited by the relevant VAT authorities, and it's only paid out once they've approved the audit itself. So it's audited in the country you're trying to recover the VAT from, and then essentially it's paid out back directly to you as the sponsor.
Okay. Dale, there's 2 more questions for you, so I'll just finish your questions first.
No worries.
Second question is, does it matter who the importer of record is, the IOR?
Also another good question. In most cases, no. And the reason we say this is because normally an importer of record, they assist with, with clearing the goods, because they're the ones who have the medical licenses. This is the big hurdle for most biotechs and everything to get through, is like, well, we don't have the medical licenses to bring it into that country. So they leverage, a CRO who's happy to act as importer of record, or a logistics provider, or CDMO. The thing there is that inevitably you're the final owner of those goods. And what tends to happen is your supplier will act as the importer of record. They'll pay those import duties and VAT up front on your behalf. But then what most likely will incur is that they will rebill those costs back to you, because they will say, look, we took on the burden of bringing it through for you, but unfortunately these aren't our costs. We're not happy to front this entire bill and wait for VAT refund ourselves. We're going to on-charge it back to you. But because you're the final owner of those goods, the end user, and it's for your clinical trial, you are fully entitled to recover that VAT.
Got it. A quick question. Which countries do not allow you to recover VAT? I'm sure a whole bunch, but are some notable ones that come to mind?
Yes, so very, very important with VAT is you have to look at from a perspective of who's paying for the VAT. I saw a question in the Q&A below, and I'm hoping this kind of addresses that, but that law of reciprocity comes into play. So I'm going to kind of focus it towards US biotechs, and then I'll kind of pivot it towards, if you have operations based in different jurisdictions. But if your US entity, your US business, if you ABC Therapeutics Inc. is being billed all the costs, that business entity is entitled to recover the VAT, right? Now, what happens is it's deemed, the VAT authorities are going to go back and look at that kind of invoice and see, well, this is a US-based organization. Do you have reciprocity with our country? Some very notable countries that don't allow for VAT and a lot of clinical trial activity takes place is Italy as the first one, unfortunately. Notoriously difficult to work with. I mean, over the 30 years that VAT IT has been around, it's just proven impossible to get any form of VAT refund from them on a foreign aspect. There are always ways to work around it, and it's obviously maybe not for this session because tax gets very complicated and it's boring, to be honest, but I'm the person who loves taxes. I eat, breathe, and sleep it, so I could happily talk about it for hours on end, but it's going to be information overload. But there are ways to work around it. So in short, if you're just wanting to do a quick foreign VAT recovery, Italy is not a good country. Portugal is not a good country. Kind of like your more Western European countries. I mean, Eastern European countries aren't the greatest. The best ones are like your Germany, Netherlands, the Spain is an opportunity too, the UK, Ireland, and so forth. But what we do have is we have actually a VAT table, which I'm more than happy to share with BSMA, which they can share. It's very specific to US-based organizations. So it'll show you what countries you are eligible to recover from. On the
Great.
other aspect of if maybe you're based in the UK, because you have a VAT mechanism, obviously other countries are allowed to recover from you. That gives a greater opportunity for more countries to recover from. So it's very case by case dependent.
That's great. And Dale, maybe we can add that country chart when we send out the recording and slide to all the registrants.
Definitely.
Yeah. Questions for Paul. Paul, can I recover import duties and taxes paid on imports into the United States?
Yeah, that's a great question. And I think Alex touched on this. You generally can't recover them. First, I guess for the topic today, VAT is not charged in the US, as we've talked about, but we do have import duties, taxes that are based on your HTS code, your commodity that you're bringing in. You can try to redeclare those if you've misdeclared them and try to get the money back in that way. But in what we've been talking about today in terms of a recovery, you can't just file a tax return and try to claim that money back.
All right. A second question. What is the risk of using a nominal value for my products like, $1, $5, $10?
Yes, and unfortunately, like I mentioned, that's all too common in my experience and what I've seen. But if you don't use an appropriate customs value, your company really risks paying significant penalties, could be fines, definitely delays with clearance if there's a question about the valuation of your product. Worst case, customs can seize your goods and not let you have them back. And in extreme cases, it can be legal actions taken against you. Really undervaluing it is a form of fraud because it goes against the WTO rules on valuation. So I highly recommend avoiding changing the value of a product.
Great, thank you. Danielle, two questions for you. What are bonded warehouses and inward processing mechanisms in the EU that allow for VAT deferment?
Great question, Dave. Bonded warehouses are usually in free trade zone international orders where you can store your material prior to the import to the EU. It's essentially deferring VAT. Once it's imported, you do have to pay that tax. It just holds it for now.
Okay, and does it matter if you classify your materials as pharmaceutical materials or investigational? Is that going to exclude you from tax duties?
So this goes back, and this was actually one of the questions in the chat. This goes back into what Alex was saying too, your HTS code classification. It's how you classify. You want to make sure that you're classifying your material correctly, so you pay the correct taxes and duties. If it's for research and development, there might not be any taxes and duties. Kind of like Alex was saying with the prototype. No matter what, you will have to pay VAT, but it will help with your tax and duties. And you also want to make sure your intercoms, if you use DAP, DDP, words, you want to make sure that's correct as well, because that's who's going to be ultimately responsible for the taxes and duties.
Great. Well, friends, we've got 15 more questions in the Q&A section. And if you don't mind, why don't we just spend just a quick less than a minute on each question? That way we can hopefully address all the questions today. Dale, so Dale, Paul, Alex, and Danielle, all set? Okay. So feel free to choose whoever wants to address any question. Number one, is VAT assessed on both goods and services?
I'm actually going to let my colleague Gabriel kind of jump in just so he can introduce himself and then answer the question as well.
Hi, Gabriel.
Perfect. Hi, everyone. I'm Gabriel. I work hand in hand with Dale in the pharmaceutical world here at VAT IT. Pleasure to virtually meet everyone. I'll answer some of these questions. I don't know where that first question just disappeared too deep. That was on the goods and services.
Yeah, the question was, is VAT applicable on goods
There we go.
and services?
Yes, the answer is yes, it is applicable on both, and it is assessed on both. There are a couple of nuances in each country and each jurisdiction where we do the VAT recovery. Something just worth noting as an example, if you're acquiring comparators, something that we see quite commonly in Germany, if the goods are staying in Germany, the VAT is going to be charged and would be eligible for recovery. Conversely, if it's getting acquired, or if the comparators are being acquired in Germany and then subsequently being exported out of Germany, there'll be no VAT on that transaction. So it really just depends on the circumstance, but for the most part, yes, VAT is assessed on both goods and services.
Thank you. If you are working through a third party in Europe, like a CRO, what entity or entities can recover VAT? How is this eligible entity identified in the paperwork? Anyone?
I'm happy to address it again. Ultimately, it's the entity that's incurring the expense is the entity that will be eligible for the recovery. In terms of identifying that entity on the paperwork, that's ultimately the entity that's being billed for the services or the goods that are being acquired.
Okay, thank you. Somebody said, I love the enthusiasm. Great. Sounds like we can get VAT back on everything, right? When can VAT not be recovered? I know we addressed this, but if you could highlight the major, the major buckets that surprise people.
Sure. So in terms of VAT recovery, and where you're not able to get it back, it's really determined by each jurisdiction and what their legislation dictates. So for the most part, when we talk about VAT recovery, we're limiting to Europe and a couple of the APAC regions. And then the various expenses in each country really depend on that jurisdiction. So it's very case by case based.
Okay. Can you, Dale, can you reiterate the VAT reciprocity in Italy? If a US company that's unregistered in the EU is shipping directly to Italy, they cannot recoup VAT, question mark. But if they ship to another EU country and then group transport it to Italy, then they can recoup VAT from the entry EU country, question. So since this is very specific, I'd request this person to attendee to please send us an email. But Dale, would you like to address it from a high level?
Yeah, for sure. The first answer, the first part of the question is yes. Unfortunately, you can't recoup the VAT. Again, based off the law of reciprocity, you're bound by legislation of that country. So Italy doesn't have reciprocity with the US and will not allow a US-based organization to recover it. The second side of that question, if you ship it into another route, that is definitely something that can be done. And actually, well, from Gabriel and myself side, and I'm sure from the other guys on the call here, and maybe other supply chain professionals, there are ways to work around it. So, for example, if you took it through the Netherlands, because the Netherlands is notoriously known for the best routing of moving goods through it, that you can use that as your first port of entry. The Netherlands has reciprocity with the US, so that import VAT that will be charged by the Netherlands Customs Authority, will be recoverable. And then you can obviously ship it up to Italy within the EU. There won't be any further import VAT implications on that.
Wow. And I'm sure this was just the surface of a complex question, but thank you. Do I need to register an entity in the country where the CTM is being shipped to, or act as the IOR to be able to recover VAT for the client?
I think from that perspective, I guess you need to understand, are you the supplier or are you actually the sponsor of this? So, I mean, if you're the supplier and you're selling a service and you're actually providing the services for the customer and you want to act as importer of record, you would have to register yourself to act as your own importer of record. The EU doesn't recommend, they mandate that you need to have a registered business and then need to apply for the relevant licenses, again, the medical license and any other form of import documents that are needed too. But again, this is a very tough question to answer on this aspect, and I apologize, I can't give a full answer to that, but if you feel free to shoot us an email afterwards and happy to flesh this out.
Sounds great. Now, Alex, I just loved your presentation where you simplified, your experiences, large company, small company, and the challenges. So let me ask you, it will be difficult to get the carrier invoices when most of the shipments are managed by CMOs. How do you manage this concern?
Yeah, I mean, like I said, that in my experience, that has been the hardest document actually to recover. You would think it might be the entry documents, but it's really not. If you're working with a broker, they should have a record of that going back for years. And as long as you request it and have the entry numbers, they should be able to get that for you. The carrier invoices, especially when you're going through a third party like a CMO and you're not booking directly, that can take some time. And sometimes in my experience, the CMO that you're working with might not be able to or might not want to share that document with you because it's basically showing a charge to their company, not yours. So it takes some time, and my recommendation would be to kind of discuss that with the vendor upfront to make sure that, anytime that they're shipping on your behalf and incurring VAT, which they're later passing on to you, that they're sharing those documents with you. And it might take some negotiating. It might take some building a term into the contracts. It kind of depends on the vendor.
Now, Alex, I've got a question for you. I know in Dale's presentation, he kind of mentioned Netherlands being, super easy to work with, and Italy being a little stressful, just the VAT process. But as a customer, if you will, or as a VAT applicant, a refund applicant, do you see some countries where it's such a breeze? And from your perspective as a client, and would you like to share some countries where it's like super easy to get your VAT back from your perspective?
I mean, it's a little hard for me to say because I've never been the one to submit the applications myself. But I think some of what's been echoed here, I know that there's a vendor I've worked with in Italy, a manufacturing vendor, and they offer a service for importation where if you let them manage the shipment to their facility, they'll set everything up and they actually import it first into the Netherlands and then truck it down to Italy. And they do that because it's easy. The VAT goes much smoother in the Netherlands than it does in their own country. So I think even within Italy, the companies that are working there recognize that it's a difficult process.
Got it. Thank you. A question from Jonathan. Not sure if this is out of the scope of the webinar, and it's not. But what role does a particular Incoterm play in recovering VAT? As we know, there's some Incoterms like DAP or the C terms that specifically talk about paying the duty charges. Paul, could I volunteer you or Dale or somebody?
Sure, I can add to this. The Incoterm says who's responsible, where, and when, and it does define who is going to be paying the taxes, so and the duties. So, but as Dale said, you don't necessarily have to have be the person paying the taxes in order to be the one recovering them. So it does play a part. You do need to know. But I think selecting, as Danielle said, making sure you have the right Incoterm will help facilitate and make it easier. I don't know, Dale, if there's anything you wanted to add to that, or Gabriel.
Yeah. No, I appreciate it, and what Paul, and I echo what Paul said there as well. I think in most cases, your drug product or your product is going to be moved via DDP Incoterms. The reason being is you're going to retain ownership of those goods throughout the clinical trials, the clinical trial phase itself. However, we do see sometimes like a different Incoterm being used into Australia where the GST is applied. They utilize DAP, which kind of negates the GST charges. But that's a supplier setup. Just back to what Alex says, like there's various suppliers that you should be working with, and if you're working with your supplier and asking these questions, you know they may be able to help you or they may not be able to help you, and that's just something to echo on that front too. So definitely work close with your suppliers, figure out how they are moving the goods on your behalf, and just make sure that if you know that there's this VAT or GST being charged, that it's not being overlooked.
Great, thank you. Friends, what is required to register for VAT in a country? And do you need to have people or operations in that country? And can you just talk about the complexity as well? I mean, yeah.
Yeah, sure. Gabe, please feel free to jump in when necessary. But there are two types of registrations. So you have a nexus registration, which is a physical corporation where you have employees based in that business. And then there is what we call a VAT registration. So this is purely for the basis of reporting VAT returns and filing for VAT recoveries. So in terms of what is required to register in that country, well, generally what triggers a VAT registration is if you go into commercial phase. So it's not always on the clinical side. We see VAT registrations take place mostly on the commercial side. However, Gabe, maybe you want to jump in here, is on the compliance side of things with intra-EU movement of goods, there has been this big upstir about needing to register in each of the countries you are moving your clinical goods to for the trials.
Yeah, I think just to elaborate a little bit further there, it's really two drivers are the main primary reasons why one would register. It's revenue generating, so the commercial aspect, and then the intra-community acquisition or the movement of product from one country to another. And then to answer the second part of the question is, in order to do that registration, you don't need to have people on the ground. It's really just to declare the revenue and the movements.
Perfect. Now, there's a question which I know Paul answered before, actually twice, even in the Q&A. What is the risk if somebody doesn't value something correctly? Research shipping with zero value. And the answer was, it's illegal, right? And can, expose you to penalties, delays. So don't do it. To Dale and Paul, what registration? Oh, sorry.
Sorry,
What
can I
registration?
add one other thing to the valuation topic?
Sure.
There's also more practical reasons. You should be
Thanks.
evaluating your products correctly, because if something goes wrong in the shipment and you need to file an insurance claim, that's going to be worth nothing if you've declared zero. And if your drug substance is worth 100 grand, then that's $100,000 that you could potentially be losing out on if the shipment
Wow.
gets lost or something like that.
That's a great perspective. Thank you. To Dale and Paul, what registrations are required for an US entity not registered in the EU? I think we've covered this, right?
Yeah, I mean, if you're looking to recover VAT specifically, you don't necessarily need, well, you don't actually need a VAT registration to go and recover the VAT itself. So it's as simple as that, and that's the stereotype that's been put out there, is that I need to have a physical presence to recover the VAT. And today's session was to highlight you actually don't, and you don't need to have this as a sunk cost anymore.
Now, does your HTS code, the harmonized code, have any impact on the recovery of VAT? Now, for those who don't know, the harmonized code determines your tariff or your customs duty, but how about VAT fees? Any correlation?
No, none whatsoever. As I mentioned in the beginning, VAT is very much separated from the duties and the tariffs. So VAT is assessed on its own, and whatever happens with the HTS code only directly impacts the import duties or the tariffs. not the VAT.
Great. If US entity is registered for EU VAT or EORI after they do a shipment direct for Italy, are they able to go back and reclaim that VAT? I mean, we know this question is Italy specific, but generally, can you do it retroactively?
So the nice thing about doing a potential registration, again, Gabriel, jump in if you feel free. But you have, it depends on the jurisdiction. Sometimes they do allow you to do a pre-date, like a retrospective registration. So if your first points of activities were, let's say, 2 years ago, and if you're in Italy, there is potentially an opportunity where you can do a backdated registration, and you can include those VAT costs in that domestic filing. So again, as we say, with that, there's so many different angles to play at. It depends on the case, but in this case, there is potentially an opportunity to do so, and in other countries as well, not just Italy.
Lovely. Now, someone asks, friends, I just want to say, in case you're wondering why we're rushing through, we had 20 questions, and we'd like to address all of them since you spent your morning or afternoon with us. So we're down to our final 8. I'm not as familiar with GST. Is it similar to VAT, and where is it reclaimable? Now, I know Canada and Australia have the goods and services tax or the general sales tax, but friends, anyone?
Yeah, it depends where you are. So GST is very much similar to VAT, especially from an Australian aspect, and even in Canada too. It's just it's the mechanism they use to obviously, track the taxes they charge on local goods and services and so forth. But they follow the same mechanism as VAT, which allows foreign entities to recover it. So it's not sales tax here in the US. It's sales tax here in the US is non-recoverable whatsoever for any foreign entity.
Great. A question from Sasha. Thank you, Sasha, for joining. How do you value biological material harvested from a patient that is used to create a cell therapy? Biosamples often value $100 or lower on the on-site cell therapies resulting out of this biological material and are often among the highest priced pharmaceutical therapies. Now, let me just address from a customs perspective. I know Paul talked about the 6 WTO valuation methodologies. So I assume we'll go down the list from transaction value to something else. But Paul, interesting question. How would you recommend we tackle this?
Yeah, this one is definitely a tough one because it's hard to put a value on it. It came out of the body, but there is some sort of cost to the company to acquire that sample. It could be, a collection cost, so you have some physician fees, maybe processing, storage costs. So there are costs associated. The key here, in my opinion, is make sure you have a documented calculation. How did you come up with $100? What was in there? Because if you are ever challenged on it, someone could say, well, maybe I disagree with you, but you presented a calculation, a rationale for the cost. They may not like it, but in my opinion, you go from a critical observation where you didn't have anything, you just picked a number out of the air, to a minor observation where I don't like what you did necessarily. So come up with a value, justify the value, have that value documented somewhere, your rationale in case you're ever asked.
Excellent. And the WTO methodology is sequential. So if there's no sales price, you've got to look at the sales price of identical goods or similar goods. So anyway, and then deductive computed. So
Yeah,
it is
I
a
would
complex.
say method 5 here on the computed value would be a valid supporting approach.
Right. Thank you. For importation of the drugs to the EU for commercial application, such as Germany, Italy, Netherlands, does the MIA license, is the MIA license required for the IOR?
Good to see you, Tammy. Sorry, I know from previous conversations. I mean, this is something that we're looking into, but based off of, the experiences of like the CDMOs, the CROs, and so forth, who act as importer of records, it does look like it's a standard regulatory need by the European Union that, you need the MIA license when you're bringing the goods in and acting as an importer of record.
Okay. Now, we were told we need a ERI for the UK. What is this? Well, I know there's a lot of information on the His Majesty's Customs and Revenue Service, but would anyone like to address the ERI in UK question?
I
Taylor,
don't.
Glenn, I mean, I've seen it where, I mean, it's an online application. You can do it in 10 minutes. Anybody can do it. I've done it on behalf of clients before, but I think as Danielle said, it's one of her myths. It is not absolutely required. It may make things easier to recover. It may help facilitate it. It's not a tremendous hurdle from my experience, but again, Dale, Gabriel, I think would appreciate what your input on that one.
Yeah,
Yeah.
I think. Oh no,
Sorry,
go
go
for it. No, go for it.
It's basically a ID number, for lack of a better term, in terms of clearing your customs into Europe and the UK. So it's as and when applicable there.
That's right. And when would the right time be to apply for a EORI? What activities would trigger an EORI application? And I assume just before your, well before you plan on importing into the UK, you know. Does anyone have any experience of how long it takes to get an EORI? It's not more than 2 weeks, right?
No, it's
I
very
don't
quick.
believe.
Okay. And the final question is, that could be a revenue for the importing country if not refunded. When we ship to another country, for example, Netherlands, and then ship to Italy, is it not a loss of revenue for the country?
It's a great question. I mean, if you're looking at it from that perspective, yes. But as we said, the EU, it's just the way they've set up their legislations. They're seen as one massive customs unit. So it doesn't, it's up to you as the sponsor where you want to move your goods through. And obviously you wanting to be more efficient for your business. They've given this opportunity to recover the VAT regardless. So they know that if you're clued up and ready to rock and roll, that you can go and recover this VAT for your business, then I mean that's down to them. They've set the legislations and so forth. It's down to you to navigate those and actually apply for the VAT refund and optimize your supply chain.
Great. Well, friends, I want to thank all our panelists for the rapid fire. You'll certainly know your stuff, and those 20 questions proved it. To all the attendees, thank you so much for attending. We've got our emails here. If you want to pass on more questions, we'll get it to the right panelist. And the BSMA looks forward to holding many more such educational webinars for our community. Have a wonderful day and thanks for your time again. Thank you, panelists. Bye, everyone.
Thank you.
Thank
Have a
you.
good one.
Bye, Bill. Bye, Devendra.
Can I give you some feedback?
Um,
Can you hear me?
Let me stop the recording.